Energy was the worst sector today, with every component closing lower in the red. Performers include APA, Marathon Petroleum, Phillips 66. Why are we seeing such a drastic move lower, and will it continue? Joining us now, Bill Perkins. He is the founder, managing partner, and head trader for Skylar Capital, an energy-focused fund. And Bill, it's great to have you back on the show. Welcome.
Thanks. Great to be back.
A lot to get into here, but first I do want to start with the move we've seen in crude oil and the fact that we are at multi-year lows we haven't seen since before the Ukraine war. How much of this is a reflection of the economy globally? How much of this is a reflection of geopolitics maybe starting to quiet down a little bit?
I mean, my personal opinion is geopolitics is kind of the biggest driver. Peace in Ukraine, which is rumored to be happening. We hear headlines about breakthroughs happening in the negotiations. What's good for Ukraine is bearish oil, which is then bearish oil producers. In the background, we also have the fundamental picture. If you look through the earnings reports of all these producers, we're hearing efficiency, efficiency, efficiency. Particularly Matador Resources talks about 10% reduction in capex, but a 5% increase in production, or somewhere around those numbers. And these are incredible numbers coming out of the Permian producers. And so we have producers that are able to survive or produce in a lower price environment, and we have the idea that more supply might be coming on via Russia sanction season, vis-a-vis sanctions being lifted and peace in Ukraine.
And just speaking of geopolitics, because you did come with some images, some satellite images, which is something else that you focus on as well. I do want to get your thoughts on the role that being able to see the world, the technology, the capabilities, space included, is playing in the energy markets and this dynamic that we're seeing around geopolitics.
Right. So these images, they come from Simmax.com and other vendors. Geospatial awareness of the globe is a must in trading right now, particularly energy trading. Tracking assets, tracking tankers, understanding these shadow fleets, what they're doing, how much oil is actually flowing versus what's reported. I think this is a must-have for most traders just to understand our world. And so as SpaceX and other launch providers made it cheaper for satellites to go up, the access to this information is becoming more plentiful. And so it's part of everybody's cookbook.
Yeah. Nat gas, it's been volatile, as it usually is. It's an area you focus on. We're still up on the year, but the fact that we've come off as much as we have here in recent days signals what?
It signals the weather. We had a huge run up with, much colder than normal weather. And then over a weekend, it all disappeared and went much warmer. And so weather is the biggest driver in the winter, and we've had some volatile weather forecasts. And if you wake up in the morning and you see a move in natural gas, you pretty much know what the weather forecast has changed or what the models have done. We're pretty much model jockeys right now during the winter. And as the winter progresses, we get into other fundamental factors that matter more.
In terms of fundamentals, I mean, we keep talking about the AI infrastructure build out and the fact that power is sort of the key thing to see all of this compute possibility realized. When does that start to factor more into the fundamentals for some of these energy prices?
I think in, year over year, we used to argue whether or not we're going to see 0.5% electricity growth or 0.9, and now we're talking numbers 2.5% and 3%. And so these are quite staggering numbers, and then natural gas gets a lion's share of that and renewables. So it's that produces more gas demand. On the flip side, never doubt the American producer. We're tracking rigs and frac crews with geospatial data, as I mentioned before, and it's really, they've been able to meet every call for needed supply ever made upon them, and then some. And so what we're going to have to decide is load growth bigger, or are the producers more Herculean than any load growth that can be produced?
So how does this set us up for 2026?
2026 is a year of tightly balanced. And one of the things we're finding is that when things change, they move pretty drastically. Like we've had a 33% range in the past 6 or 7 days in natural gas. And so the brakes on the system make it a little bit more volatile. But we seem to be finely tuned to be neutral at these price levels. But who knows? The weather might come in even warmer or colder, and we'll whip around.